Welcome to the recording of the Business Tools for Improved Sheep Performance webinar. This webinar was presented by Ian McLean from Bush Agribusiness on the 9th of December 2021. This is clip 8 of 8 and covers tracking livestock inventory change and determining flock income.
So the livestock inventory change looks at the change in the value of the flock over a year at constant market rates. So within a year we value them at the same value. We don't adjust for market through the year. Year to year we adjust for the market, but we want each year to be reflective of actual sales, actual purchases, and change in flock size and composition, not necessarily changes in the market. Tracking livestock inventory change, as we touched on before, is particularly important when you're selling down or building up a flock. If you're selling down, you're going to have large cash income, which we can't recognise all as income because we're sold out of capital. Conversely, if you're building up numbers, your sales will be low, but the value of the flock will be increasing in the paddock, and we need to accurately account for livestock inventory change to measure that. And our flocks are never in steady state. We never finish with exactly the same number as we start with, so it's important to take that into account. So here we have an example, same one from before. We've applied a value for each class, work that out. The opening inventory is 914,000, and then we've got $1.13 million for closing inventory. So our inventory change is $215,000. So the value of livestock in the paddock, the flock numbers went up about 1,100 head. That equated to $215,000. So when we're working out our income, that gets added to income there as that livestock inventory change. If it was the other way and the flock decreased in size, we'd take that off. And we need to include wool income. That gives us the flock income or gross profit. And we divide that by the number of DSC. It will give us the income per DSC. Wool income is critical. In the long term, it's 60 to 70% of the income of good wool enterprises. So that therefore should be the focus. That's the driver of it. The flock income per DSC lets us work out the enterprise profit and compare that to other enterprises. So in summary, it's perhaps a bit of a cliche, and I don't really like saying it, but you can't manage what you don't measure. And in this day and age, with the value of livestock, the value of land, and how you need to get every cent out of it that you can sustainably, you need to have a good handle on that particular sense, your biggest trading asset. So you need to understand your livestock inventory in order to be able to understand flock performance, even just for yourself. If you've got looking at this, you can see how it's changing year to year and understand that. You can match your stocking rate to your carrying capacity, compare enterprise performance, allocate your available carrying capacity to its best use, and software can be a very useful tool for your management system, but software isn't the solution. You having a good management system, for which software may be a tool, is part of it. So I'll pull up there and happy to take any questions. Thank you.
Thank you for watching this short clip. For more information, please visit www.leadingsheep.com.au.